Welcome to VARINDIA News Hour. Experts talking about startups, the bubble is about to burst. India is amongst the top 5 startup ecosystems in the world. According to India Venture Capital Report 2021 published by Bain and Company, the number of cumulative startups has grown at a CAGR of 17% since 2012 and crossed 1,12,000 by December 31, 2021. Startups have emerged as key drivers of economic growth and job creation and are often a catalyst for radical innovation. Now, India is home to 79 unicorns with a total valuation of $260.5 billion, which makes it the third largest after the US and China. Out of the total 42 unicorns with a total valuation of $82.1 billion emerged in 2021 alone, a record year for the country. Startup valuations are rising thanks to ample capital availability, limited investments with strong yield and related issues. Startups have created immense value for founders and investors alike. The accelerated development of the startup ecosystem needs significant funding, and therefore the role of venture capital and angel investors are critical. There are 32 startups founded after the year 2000 and have the potential to turn into unicorns in 2 years, and 54 cheetahs, potential unicorns in 4 years. It is also true that a few highly successful startups with astronomical valuations and a few spectacular failures get discussed disproportionately, creating the perception of a funding or valuation bubble. Overall, the venture capital asset class has done well for its investors who understand and provide for the high-risk nature of these investments. India has emerged as one of the world's top hubs for startups. With large-scale support from investors and the government, a large number of startups have gone on to become unicorns. However, volatility in the market amid rising geopolitical tensions and the ongoing pandemic has dented the growth of startups. 197 Communications, that is Paytm, FSN e-commerce, that is Nykaa, Zomato and PB Fintech, that is Policybazaar, who together commanded Rs 3.58 lakh crore in market value on day one of their listings. Investor losses in Paytm, Nykaa, PB and Zomato mounted to Rs 1.3 lakh crore since day one. Investor earned money is at all-time risk as earnings misses supposedly reach valuations, and a sharp fall in technology stocks globally sent shares of a few new age companies tumbling on the Wall Street. Secondly, there are several unicorns bleeding. Oyo loses Rs 76,000 every minute. Paytm is losing Rs 60,000 and 69 every minute during the period, whereas Swiggy is at Rs 25,000 and Zomato is facing loss of Rs 4,876 per minute. The report shows PB Fintech is losing Rs 22,995 every minute, and we have seen MobiKwik is also losing Rs 2,147 per minute. It shows most of the unicorns are losing revenue. Now the question is, who is responsible for this higher valuation? And the investors are raising voice to the authority approves it. As per PGA Labs, India may add 45 startup unicorns in the next 12 to 18 months and has raised concerns over investing in loss-making companies. It expresses like, turnover is vanity, profit is sanity, but cash is reality. There are suggestions that investors chasing new-gen loss-making IPOs at crazy valuations should realize that many of them may never make profits nor exist with relevance. Let's look into today's headlines in VARINDIA. Government to create equity fund for startups with 20% limited partnership. The Minister of State for Electronics and IT Rajiv Chandrasekhar said that the government will create a new equity fund for startups with a 20% limited stake to provide additional capital support to the entrepreneurs. The fund will be managed by private fund managers, Chandrasekhar said, adding that this will create required private equity capital as an addition to what exists today. The government has already put in place some of the funds like the Startup India Seed Fund scheme with an outlay of Rs 945 crore to help startups in meeting their capital requirement. Government gets proposals from 5 companies for semiconductor display fabs. The Ministry of Electronics and IT said so far 5 companies have shown interest in the government's Rs 76,000 crore PLI scheme for setting up semiconductor and display fabs. India Semiconductor Mission has received 5 applications for semiconductor and display fabs with total investment to the tune of $20.5 billion or Rs 1,53,750 crore. 3 companies, Vedanta in JV with Foxconn, IGSS Ventures Pte. Singapore and ISMC have submitted applications for setting up 28 nm to 65 nm semiconductor fabs with a capacity of approx 120,000 wafers per month with a total $13.6 billion investment. No need of multi-device support for using one WhatsApp account. There is no need to rely on the multi-device feature. The feature allows users to use one WhatsApp account on more than one device. However, the multi-device feature only lets users log in from a smartphone, computer or an iPad at the same time. The feature doesn't allow users to use one WhatsApp account on two phones. It would require a third-party application to do so. However, if users attempt to frequently switch their WhatsApp account between different devices, at a certain point, they may be blocked from re-verifying the account. So it is advised to use the app at one's own risk because WhatsApp does not allow it. More than half enterprise IT spending expected to shift to the cloud by 2025. According to research, 51% of IT spending in 4 categories will move from traditional solutions to the public cloud by 2025 compared to 41% in 2022. The research focuses only on those enterprise IT categories that can transition to cloud within the application software, infrastructure software, business process service and system infrastructure markets. 65.9% of spending on application software will be directed towards cloud technologies in 2025. Traditional offerings will make up 58.7% of the addressable revenue in 2022. The global 5G enterprise market likely to reach $83.45 billion by 2031. The global 5G enterprise market will reach $83.45 billion by 2031, growing by 36.5% annually over 2021 to 2031, driven by the rising demand for efficient communication and increasing penetration of 5G networks, the emergence of Industry 4.0, development of smart infrastructure and the delivery of differentiated 5G services using network slicing technique. The balanced projection is used to evaluate global 5G enterprise market in every aspect of the classification from perspectives of component, network type, frequency, spectrum, organization size, application, industry vertical and region. That's all for now. Please like, share, comment and subscribe to VARINDIA News Magazine. You can download the VARINDIA app from Google Play Store and Apple App Store for the latest news and updates. Stay tuned. Thank you.